Hello guys, welcome to yet another educative and enlightening session. If this is your first time on the channel, check out my other videos on the introduction to cryptocurrency series. You are most likely going to need them if this is your first time in the cryptocurrency world. Today, we'll be looking at what you need to know about investing in cryptocurrencies. So sit back, relax and watch to the end because trust me, you don't want to miss any second of today's video. Before I begin, I would like to state for the record that this is purely an educational material and is in no way intended as a professional, legal or investment advice. Any decision to invest or take any other action with respect to cryptocurrency investments may involve risks not discussed herein, and such decisions should not be based solely on the information contained in this video. Please carry out further research and seek professional, legal, and investment advice from verified and reputable investment experts. If you are still watching, then it most likely means you have some sort of interest in cryptocurrency investments. This may be true or not, but I strongly recommend you watch till the end because this knowledge may come in handy later on. After all, knowledge is power. Investing in cryptocurrencies require a level of due diligence not too dissimilar to the research involved in other investments. What this means is that it is always advisable for you to carry out your personal in-depth research and study before you start your cryptocurrency investment. Don't just take someone else's word for it. There are some things you must know and understand before you make any cryptocurrency investment. Firstly, you must know that cryptocurrencies are volatile in nature. What this means is that their value appreciates and also depreciates with time. This is majorly dependent on the amount of that particular cryptocurrency in circulation and also by the demand for it. The lesser amount in circulation and a high demand would definitely translate to an increase in the value of the cryptocurrency, while the higher amount in circulation and a low demand will also translate to a decrease in the value of that cryptocurrency. The cryptocurrency ecosystem is relatively new, and as such, not everybody has the right knowledge and understanding of how to trade in cryptocurrencies. For that reason, very many people are skeptical about it, especially those who are technophobic and do not understand the technology behind it. It will take some time for some people to fully embrace cryptocurrencies and the technologies that support it. Because the digital currency space is such a trendy area, things tend to develop very quickly. More important than word of mouth, though, is the specifics of a digital currency or related project itself. When you are considering an investment, take the time to find the project's white paper. The white paper is a development team's chance to lay out the who, what, when, and why of their project. Every crypto project should have one, and it should be easily accessible. If it's not, consider that a red flag. Read the white paper carefully. It should tell you everything about what the developers of the project intend in their work, including a time frame, a general overview of the project, and specifics. I'll be sharing with you some tips on how to invest in cryptocurrencies. Do your research. Before you begin any cryptocurrency investment, it is of utmost importance to first conduct adequate research on every available aspect of it. This will play a vital role in finding a reliable cryptocurrency exchange, deciding how much of your assets you want to be converted, and choosing which forms of cryptocurrency based on what utility the coin brings into the system that you want to invest or trade in. Understand the risks and plan appropriately. You must know and understand the volatile nature of cryptocurrencies and how one can easily run at a loss if not properly understood. Because of its volatile nature, you should only take smart and calculated risks when investing in it. Investing your entire life savings is not a very smart move. It is always advisable to invest only a portion of your assets. Do not overcapitalize on projected growth. When a particular cryptocurrency seems on a definite upward trend, many people are tempted to leave their investment for as long as possible to attain the maximum possible profit. This is rarely a good idea, as it might ultimately cost them a significant portion of their earnings. As a matter of fact, I made this very mistake when I first started out. Although I didn't lose too much, but it could have been worse. This is why I do not want others, especially beginners, to make the same mistake. You don't have to take everything out, but removing a measure of it to maintain profit is a very reasonable idea. You may not make as much profit if the upward trend continues, but you would have definitely saved yourself from a loss. This tactic is always the best, particularly for beginners. Fear of missing out. This is defined as the anxiety that you are missing out on something exciting or interesting that is happening. It is often aroused by posts seen on social media. You might wake up one day to the buzz all over the internet of a sudden spike in the value of a particular cryptocurrency, and unknowingly to you, this might be while it's close to its peak. Unable to resist the possibility that this upward trend will go on for some time, you decide to buy and store so that you will earn more profit later on. But all of a sudden, the value dips and everyone starts selling, and you are left with a currency that is fast losing value and will present a definite loss. This is a classic case of FOMO, something that many new users will doubtlessly encounter but will need to manage in order to survive. Do not take a loan to invest. In spite of the current interest rate environment, it is recommended that you avoid funding your cryptocurrency portfolio with debt. Taking out a loan to invest in cryptocurrency is a very risky option, and if failed, can open you up to more debt and financial woes. As much as possible, only spend a portion of your own money and never fund your cryptocurrency investment with borrowed funds. Diversify your portfolio. Diversification is a very key ingredient to success. Diversifying your portfolio may give you some kind of protection against losses. I'm sure you noticed the use of may in my last sentence. This is because in cryptocurrency investments, there are no 100% guarantees. If one cryptocurrency is losing value, another one might be gaining value. Set realistic expectations. As with most investments, you should set realistic expectations for yourself when planning to invest in cryptocurrency. You may fail or lose some money, but ultimately you will learn. Please know that this doesn't necessarily mean you must fail in crypto investments before learning, hence the use of the word may. In fact, that is the reason there are many educational materials just like this video out there that can help guide you in making informed decisions. Don't be fooled. Yes, some people are rich now because they invested in Bitcoin a few years ago. However, you need to keep in mind that just because the price of Bitcoin spiked in 2017 doesn't mean it will keep spiking each month. Just like any market, the cryptocurrency market moves up and down. It spikes in both directions. It's important to remember that the more volatile the market is, the more difficult it will be to make smart investments. Once you have done your due diligence on a particular crypto you want to invest in, the next thing is to find a trusted cryptocurrency exchanger where you can buy and sell on. There are many crypto exchange sites online, so you need to be careful when selecting which exchanger to transact with. There are two choices for a cryptocurrency investor when it comes to storing their crypto holdings: custodial or non-custodial. When users store their holdings on a platform like an exchange, that is considered custodial. Users hand over security measures to the exchange. But when a user holds their funds in a wallet that only they can access, it is non-custodial and free from platform risks. Both of these methods have their merits and flaws, and the best option varies for different types of investors. In another video, I will talk in detail about this. Use the right analyzing tools. Make sure you have the right analyzing tools that will help you make smart investment decisions. If you want to be successful, all your decisions must be based on technical analysis and not emotions. Don't check the price action every 5 minutes. This is bad for your mental health and for your pocket. You might get emotional, you might feel scared, and you might close the trade too soon or open another one based on emotions. Stay updated. As the popular saying goes, information is power. You should always follow the news and stay updated with the happenings in the ecosystem because the market is very volatile and the news can cause big spikes in cryptocurrency prices. The market will react accordingly to news reports like if a currency has been listed in a new exchange, if a cryptocurrency has been banned in a country, or if a cryptocurrency has a new approval from the government or a big international company. These are all important events that you have to keep an eye on and react to quickly. That will be all for today, guys. I trust you found this video educative and informative. Thanks for watching.